Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
But the bottom line is that, what we want to do, and this is the rule I was talking about earlier, is take half of the position profits if we can get a double, or if it gaps more than that in our favor, then we want to lock in load. Just say, okay, release the fear that we all have of giving back our profit. Because when that fear of giving back our profits that we all have is something in which you'll find that it'll force you out of trades too quickly. You'll not give yourself a chance to ride the big moves, the ones that are going to carry your results, in my experience as an option buyer, even buying the right type of option, which is an in-the-money option. And this kind of also goes back to, that's the buyer strategy. If you're a credit spread trader, credit spreads is another strategy you can use where you actually sell an out-of-the-money option and then you buy an even cheaper, further out-of-the-money option to protect it and just seek to sort of let it not get there. So if you're getting a downtrending signal on % R or acceleration bands, you could do the call credit spreads above the market. If you're getting a bullish signal, you could do the put credit spreads below the market. So the market's constantly changing. This just allows you the ability to change with it. It's very, very effective. Now, when you release that fear, what do you do with the other half position when you're riding that big trend? You want to ride it until it does one of two things. It either gives back half of its peak gain. So say it went up to 150% gain. If it comes back to just plus 75%, cut and run on the rest. Or we'll exit half again if it doubles once more. So remember, you only have half of a position on, and we're saying exit half of a half, or a quarter of your original position if it goes on to a double on a double is a 300% gain. So, those don't happen very often, but when they do, they're a lot of fun. So, that just gives you some ways to manage this. Michael asked, do we find ETFs or equities easier to use with this strategy? Really, both of them work quite well. It's really a function of just allowing you the ability to trade them very effectively. Now, Eric also asked, have we tried to trade Forex with this methodology? It works beautifully with Forex. Why? Because Forex is a very trending market. The currencies can trend quite nicely, and so you'll see that clean trending markets is what you want with this type of a strategy. The noisier it is today, on any given day, the more it's going to risk flushing you out. So we want to definitely be careful of getting flushed out. So for more information about the ETFs and the ISE indexes, you saw some of them here today, you can go to the ISE.com site and you can just do a /ETF or a /index to get more information on those. MA asked, by the way, about the weekly options. Definitely, we do like the weekly options. I still like, even more than ever, buying the deep in the money option. My rule of thumb as an option strategy player for weeklies is when I'm buying, I like to buy an 80% or more delta. That means it's going to move 80% of the stock point move or more. So the stock goes up a point, the option goes up 80 cents. That's an 80% delta. If you're in a put option, stock goes down a point, you make 80 cents on a put option. That would show as a delta of minus 0.80. So it's inverse to what's going on with the stock. So we're looking for those opportunities all the time. Buy the in the monies. Consider selling the at or out of the monies when we're getting close to the expiration. So you can do this strategy across short-term and longer-term strategies. To sign up for free ETF trade alerts, you can go to ISE.com/ETF trade alerts feature, as well as ISE podcasts and the ISE webinar series. And this webinar will be archived like many others have before it. So it's a great learning tool for you. Just go to ISE.com/webinars. And then we've also, at Big Trend, set up a special page for you as well. So we're going to throw in a nice little bonus for you here today, and that's that you can also get a special report where you want to learn more about %R, you want to learn more about acceleration bands. We set up a free report on our website. If you go to just bigtrends.com, /ISE, you're going to get a free report, and you're also going to get a free 3 months of our what we call our Investor's Edge. It's a really investor and trader daily update about the condition of the market. So this is something we just set up just for ISE attendees here. So check it out at bigtrends.com/ISE. You'll get that with no obligation, no credit card required, just a free 3 months of what I'm looking at based on the %R. %R is actually our main driver on the market timing systems for the condition of the indexes, where we think the indexes are headed next. We look at the big indexes, not just on the markets, on the equity markets. We also look at gold, oil, bonds, those kind of big picture indexes as well. So we can really kind of show you where we think the next opportunity is. Plus, we now include some trading ideas each week on that Investor's Edge program as well. So check that out at bigtrends.com/ISE. I think you'll be quite pleased with that nice little bonus that you get for being an attendee today. So any other questions you might have about the options strategies or the technical analysis? I know Israel asked about the criteria. Again, it's just a function of, remember, for %R, you're looking for the top 20 and bottom 20% of moves. You're really looking to sort of weed out a lot of the noise of the markets. I think that's one of the biggest things as a trend trader. That's your biggest challenge in my experience is it's the noise factor. That the noisier it is, usually the more frustrating that market is. So what we notice is that when markets start to trend, however, the noise quotient actually drops. You'll see a lot more of what we call a coherent move, a move that's very much making sense within the trend-based indicators, that is showing very consistent price action, higher highs and higher lows for an uptrend, lower highs and lower lows for a downtrend. So you're looking for those type of steady, persistent moves to really take full advantage of what the market can do when it starts to trend. The move that we had off of the late June bounce into early July, it was phenomenal there for about a couple weeks, and you went and you looked at not just the index move, say on an hourly chart that picked it up for a really nice 1 week type of a trade for swing traders, but also the individual stock names, the Apples and Googles and Pricelines, a lot of these stocks. And that's why MA asked about weekly options. That was particularly impressive for the weekly options because you could really leverage that with short-term options, and still we were trading in the money all the way, even though we had very aggressive buy signals. I said, look, let's just stick with our strategy here. You don't have to always hit the home run. It's okay to hit singles and doubles and be consistent in your trading and also reduce risk while you're trading. That's a very important principle. Now, Robert asks, what about the volatility of the stocks, high beta or low beta, say pharmaceutical versus utility stocks? What's my preference? Well, we definitely tend to be geared towards stocks that move, so probably more the high beta names in the sense that, we want them to be able to move up or move down, and when they pick up that momentum, you can really see them move quite dramatically. And so Michael's saying, thanks so much, coming our way soon once you can free up some existing trades. He says Moody's just warned of a possible downgrade to the U.S. That's a shocker, right, that the U.S. on paper is broke. The reality is that, it's one of those situations where regardless of what the news is, you must trade based on what the money flow is telling you about the markets. And so my experience has been that you will hear bad employment news, you will hear good news. The key is, what does the market care about? What's been impressive about this market in recent months is it seems to shrug off a lot of bad news. Sure, it'll have its initial downs for a little bit, but then it'll shrug it off and it'll rebound. And so you have to respect a market like that climbs a wall of worry. So that's something that, it'll teach you not to step in front of freight trains, not to try to fight the trend, but rather wait and get in tune with the trend. So do we have a weekly options advisory service? We do. It's directionally based, MA, so it's called Extreme Options, and you can just call us at 800-BIG-TRENDS or drop an email to price@bigtrends.com, and I'll be happy to make sure that my associate gets on there and gets a sample over to anybody that requests a sample of our weekly option service as well. But be sure to check out that bigtrends.com/ISE site that we set up for folks just so they could actually take advantage of that free 3-month offer, which is really a great offer for getting a really nice long trial flavor for what we're all about at Big Trends. Let's see, how many bars else can an acceptable entry be after an overbought or oversold level breakout happens? That's a very good question, Demetrius. My rule of thumb is on a daily chart, it's 5 bars. That means that you have 5 days for that move to follow through. If it chops around and fails to follow through, we just say, no, not interested. It's not getting that takeoff, that thrust with enough follow-through power to really justify it. So we'll pass and move on to something else if it's not moving quickly enough. Okay, well, it looks like it answers all the questions for now. I want to thank everybody for being with us today. Always great to share with you some fresh perspectives, and I'm going to hand it back over to the good folks at ISE and say thanks so much for hosting today and hope you enjoy the presentation.
All right. Thanks so much, Price. Thanks for sharing your insights today. Thanks to everyone for also joining us this afternoon. As Price mentioned, if you'd like to learn more about the indexes and all of the related ETF products that we discussed today, please visit ise.com/index and ise.com/ETF. You'll be able to find more product info, articles, and a link to sign up for those free trade alerts. We do have a lot of those resources available, as we've mentioned, so if you're looking to trade products based on these industries and sectors, make sure to check out the website and take advantage. If you have any questions or comments, send us an email to webinars@ise.com. Thanks again to everyone. Thanks to Price, and we hope to see you back next time. Take care. Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.